Welcome to the Dental Business Guide podcast. From money to marketing to management, this podcast will help you run a better dental business.
Okay, good evening, everybody. Aaron here, and lovely to meet you here this evening on a cold winter's November evening. Now, excuse me, I've got a bit of a cold, so I'm just trying to recover from that. But today, I'm going to be talking about the budget that was announced today by our friend Rachel Reeves. I'll keep this relatively swift, okay, maybe for 20 minutes, and just run through some of the key points that came through the budget. I don't know if people were aware, they saw the news, but the actual budget was released in advance by mistake by the Office of Budget and Responsibility, Budgetary Responsibility, on their website. And I don't think Rachel Reeves was too pleased by that. Maybe it was politically motivated, that release, who knows, okay? But that's what happened. So a lot of the stuff that she talked about at 12:30 was actually on other websites earlier on. But anyway, that's the past. We need to look towards the future, and we need to understand, okay, how does that impact businesses, business owners, our clients, and the impact on what you may be able to do. Now, in summary, my kind of gut feel and honest opinion is that it could have been a hell of a lot worse. It's not great, okay? But it could have been worse. I think that's the key message from this. There could have been income tax rises. There could have been further exit wealth taxes. There could have been a whole range of things, okay? Further issues on pensions. But in saying that, it was a bit of a budget. Nothing. There was so much of a build up to it, and then the output was pretty unexciting, to be honest with you. At least, so. Now, how does that impact? So let me go through a few slides that I've put together, and then we can run through it. So, for those new to any webinars that we do, as you may not know, my name's Aaron. Perhaps that's a little bit younger when I was looking a few years ago, better haircut. But I'm the owner and CEO of Samera, chartered accountants for pretty much dentists and other healthcare professionals across the UK. I'm also the owner and CEO of Samera Global, where we provide manpower from overseas to support businesses. We also are co-owner of the Deemtree Dental Group, based in Surrey in London. And kind of my experience has been significant in the dental sector, working with dentists of all shapes and sizes, from associates all the way to practice owners and everyone in between. We help with accounting, tax, financing, funding for purchases, due diligence, tax, accounting, you name it, okay? Anyway, that's enough about me. I'm a trained chartered accountant with PwC, but for the last 24 years, I think it's 24 years, I've been working with dentists. So, that's all I can blame my wife for that, because I married a dentist. It's me, too. So, budget. Excuse me. Now, the autumn budget ultimately was delivered against a backdrop of weak productivity and higher borrowing costs. For small business owners, it's mixed news, as I mentioned. There's a little bit of support, but ultimately there's significant tax increases, which will affect the take-home pay, any investment or savings income that you have, and ultimately operational costs. So overall, it's a heavier tax environment for SMEs, for dentists, for owner-managed businesses. There's no getting away from that. That's the bottom line. And I think with this current Labour government, with subsequent budgets, I can't see it improving. It may stay the same, but it may even get worse over the next few years. So my gut is telling me they'll make these changes, but I don't think the public will be too pleased with them. I don't think businesses are overly pleased with the budget. I don't think it's as bad as it could have been. So that's why the stock market rose today. But I think that the Labour government are probably signing their death warrant, I think, for certainly from a business perspective. So what are the changes? Right, from April 2026, dividend tax rates are going up. So if you are paying yourself a dividend, from your limited company. The basic rate dividend tax increases to 10.75, high rate to 35.75, and the additional rate to 41.35. The allowance of £500 remains, and bottom line, this reduces the efficiency of the salary and dividend model, which is quite often used by our clients in extracting money. Directors extracting higher dividends will see reduced net income. So dividend tax in a nutshell, gone up by 2% from April 26. Not great. The other big issue, which seems to be which is called fiscal drag in a nutshell, is that personal allowances are ultimately frozen for tax purposes. So what that means is that if salaries are going up or your earnings are going up, the tax bands still stay the same. So if your salary is risen at a higher rate, the actual tax band is still stayed the same. So you are then taxed ultimately higher. More money goes to tax. So this pushes more earners are pushed into the higher tax bracket as your earnings increase. So you effectively get less money. If they were pushing up the tax brackets higher, then obviously that goes in line. So the bottom line here is you're going to be paying more tax. NI thresholds are frozen. Again, increasing national insurance paid over time. So again, this whole model of trying to save tax by having a lower salary and dividends isn't so great. And in addition, this does impact employees too, because if their salaries are going up but the thresholds are still lower, they'll be paying more tax as well. So another negative point for any kind of high earners, or even any earners out there, is this is how she's getting more tax from us. Corporation tax, that's remained the same at 25%, which is fine, but capital allowance is reduced, meaning lower upfront tax relief on equipment, machinery, and qualified assets. So you might want to start thinking about when you're going to invest in equipment. It may be better to start investing in that earlier rather than later. It impacts things like healthcare businesses, dentists, doctors, clinics, all these equipment-heavy sectors. So you need to review when the dates are, and also then look about when you're going to be spending money. That's going to be really important as well. The other big note again highlighted in this budget was from April 29. So it's still a number of years away. And I think that's one of the points that I picked up on. A lot of these things aren't happening immediately. Some are, but a lot are happening in 2-3 years down the line. It's all kind of factored in. And and I think Rachel Reeves was very positive. Oh, our forecasts are going to be accurate based on all this information, everything's happening. But what I've learned from experience is that these forecasts are rarely accurate. They rarely meet the targets. But anyway, on the pension side of things, a salary sacrifice pension contribution, anything over $2,000 per year, will attract employer and employer national insurance. So currently, salary sacrifice avoids national insurance entirely, which has been very effective for business owners. Now, this change removes much of the NI advantage on higher contributions. Small business owners using pensions to extract value tax efficiently will face higher NI costs, and employers offering enhanced pensions will also face increased national insurance liability. So in a nutshell, she's coming after us with our pension contributions. So anything over $2,000 a year will attract employer and employee NI. Not great. So far, so negative. Other taxes in addition, it's still not good. Things on savings. If you're a landlord, all these other things, you'll get taxed another 2 percentage points on rental income will be taxed. Other investment income will taxed by 2%. Other diversified income, properties or investments, you'll get 2% taxed on that, an additional 2% tax. And this is all on top of all the taxes we've talked about in the dividend tax increases and the tax thresholds we've discussed already as well. So what does this mean? What does this actually mean? Well, you've got higher taxes, reduced allowances, therefore the complexity of salary, dividend, pension planning increases, requiring more detailed financial advice. Yes, that's more. That means you're going to need to talk to people like myself, perhaps more. This means and that accountants will have to help navigate this better. Many kind of analysts are warning that the budget reduces incentives for small business growth and formation and growth, and more planning is required to optimize tax efficiency across all income types. Now, in my view, I think it was inevitable that we're going to get taxes were going to rise. She hasn't increased the rate of VAT. She hasn't increased the rate of income tax, but she's done all these other sneaky little tricks to grab more tax. So what does that actually mean for you as a business owner? What can you do? Well, I don't think you should be booking your flight to Dubai or to Monaco or to Italy or to wherever it may be, that may be sunnier climes, if you want to be part of the UK establishment and part of the UK kind of environment. But the inevitable is that they need to raise tax, and we as maybe business owners or maybe higher rate earners will be penalised and taxed for that. Now, does that discourage investment? Does that discourage entrepreneurship? Maybe for some people it may do. But in my view, ultimately, you just got to keep going forward and keep pushing forward in this whole situation and seek out the best advice possible for your business. Now, there have been some support measures implemented and kind of highlighted. There's some support for which will be around regional growth incentives and selective investment schemes. What they mean, there's nothing more detail on that at the moment. But I don't think any of those will really offset the increased tax burden for SMEs. One thing she announced would be free apprenticeship funding for SMEs. That sounds very attractive. So if you're trying to hire young people under 25 to come on to apprenticeships, they're saying it's free. I think the devil will be in the detail, and it's quite an attractive thing if you're a business trying to look for younger staff members and looking to develop staff members. And that's something that I myself will be investigating for my own businesses to see what are the benefits, what are the advantages there for us too. So that's an opportunity there. But apart from that, not a great deal. So what's the net impact of all of these things? Profit extraction via dividends becomes less tax efficient, bottom line. So if you've got a limited company, taking more money out via dividends is definitely less tax efficient now. But if you've got a company, there's probably not any other way to do it. You're not really going to dissolve the company. It's not really the right things to do. There'll be reduced capital allowances on items you purchase for clinics, such as chairs, scanners, IT upgrades. Pension-based extraction strategies lose attraction due to the national insurance charges. Owners with rental or savings income face additional taxation. So all of these things compound. And really what you need to start thinking about is cash flow planning becomes a lot more essential due to combined tax pressures. So there's all the taxes and further national insurance, income tax, the fiscal drag, and ultimately people like dentists, doctors, legal accountants are all going to be affected by this. And I was just looking at my own firm, looking at my wife's business. There's no doubt we'll be affected by this. Now, how do we minimize the impact? Good question. Now, the danger is that you put your prices up and that's inflationary, then that could have an impact on demand. And the government doesn't want it to be inflationary, because if you put the prices up, they might have to raise interest rates to bring inflation down again. So I hope they know what they're doing. To me, I don't think they do know what they're doing. That's my own personal opinion. And I think one of the really key points here is that I listened to the whole budget today, and then I heard Kemi Badenoch briefly afterwards. I didn't listen to the whole thing of hers. And none of this actually inspired me, okay? How are they supposed to inspire business? They're not inspiring anyone to go for it, to invest into the UK economy. They say they want UK to be the best business environment in the world. They want to attract investment from all over the world. But yet they've raised these taxes and they haven't really inspired me as a business owner. I'm just an average business owner here in the UK. And I'm sure many other people feel similarly. So let's see what happens, okay, over the next year or two. But what can we do? We have to suck it up and see. We have to seek out the best advice, and we have to keep going. We have to keep pushing. We have to keep trying. We have to keep the hustle alive, as they say. So I strongly suggest not to get down by all of this, okay? It's an inevitability. Taxes, as they say, and death are the inevitabilities of life. And this is just a further reminder of today's budget. So just to put the nail in the coffin, for anyone who's wealthy enough and has big houses or is aspiring to own a big house, they're saying from 2028, there'll be a further tax, a mansion tax ultimately, on houses worth more than £2 million. And if you own houses, if you're lucky enough to have a house that's over 5 million, that's going to be about £7,500 on top of your existing council tax. So it may not impact you, but it just seems to be penalising. This budget seems to be penalising for people who have aspirations, who want to grow and who want to develop. And people may think, well, why do I want to buy a £2 million house now, or 5 million? I'll just stick with something smaller. I don't know. Okay, it's just this is the vibe I got, and I understand that she wants to fund the government and improve schooling and the NHS. I get that personally. I think that's a great idea, and that's needed. But there are other ways to do that, and that other way is to encourage investment, encourage business. And to me, there was no encouragement in this budget to encourage the business owners out there. So key takeaways. I did say it's going to be about 20 minutes. I'm almost there. Review your salary, dividend, and pension extraction strategies with an accountant. If you don't have an accountant, maybe reach out to me or my team. Consider bringing forward equipment or refurbish investments where possible. Update your forecast to include higher dividends, savings, and rental tax rates. Prepare for fiscal drag, as thresholds are now frozen until 2031. Ultimately, budget for increased compliance and advisory costs. Yes, that's me. My costs, accountants' costs, advisors' costs. And really ultimately take a multi-year planning approach to optimize tax efficiency under the new rules. Don't just look at it in isolation in 1 year. Don't look at it and say, oh my God, it's too high. I need to do some. Don't be rash. Okay, just think through all the options. Talk to all the right people. We work with a lot of clients, and if we don't have the expertise in-house, we can bring in other experts into the arena who might have a very specialist expertise on a particular domain. So we can certainly help there as well. Just to compound this further, just to put the nail in the coffin, which I'm sure you don't really want to hear, Making Tax Digital is coming in April next year, and that's another burden for anyone who's only over 50k. You'll need to be making quarterly submissions with digital software, plus one annual submission too. So no longer one annual return, effectively 5 annual returns. Again, if you need help, we can certainly help you. This is what we're doing. We're signing up people to this now. Getting people organized and ready for that when it kicks off in April next year. So tax seems to be the common theme across this all. So now you might be depressed. Please don't be depressed. Life's not that bad. We need to keep moving forward. But if you need a new accountant in this space, we deal with 99.9% of our clients are dentists, and they're not a dentist. They might be a pharmacist or a doctor. We're taking on around 10 new clients a month, and we are specialists in this accounting and tax space. We deal with everything from associates to multi-practice owners. And one thing we're very, very proud of is that we're very tech-driven. We use technology to try and automate things as much as possible, keep costs lower, and of course, we're pretty damn tax savvy as well. If you need any help, best bet is to go to our website. There's tons of information there. Book a call with myself or perhaps my colleague Natasha. And there's for a free kind of Calendly link on there, and you can book a call with us just to discuss your particular needs. And I suppose increasingly, we know it's a tough tax environment, but, and my last phrase here is focus on what you can control, okay? You aren't going to be able to control what Rachel Reeves says. You aren't going to be able to control what the tax rates are. You aren't going to control what HMRC is going to demand from you. You can only focus on what you can control. That firstly starts with your mindset. Secondly, the work that you do, the effort you put in, the strategies you put into place in your business. And if you focus on that, And tax is an inevitability. We're going to have to pay that anyway. We can help you with all the accounting, finance, tax, and all the strategies that you need to kind of grow your business. So my take from this whole budget is, honestly, I'm double downing, okay, on everything in my business, in my wife's businesses, on my Samera side, the financing side. We're double downing on everything. If they're going to take tax, I'm going to have to make more money, bottom line. And that's kind of the game plan. One of the areas that we're also working with clients now, and I had another inquiry today, is that I think as costs are rising, people are looking at other business models. And we have people talking to us now about saying, well, actually, can you provide manpower to answer phones or deal with WhatsApp messages or calls or emails overseas? And that's what we're providing now. We provide manpower overseas. There'll be no national insurance, no employer's tax or employee tax, employer's tax, none of that stuff. And it'll be significantly lower rates as well, whilst also attracting good quality talent as well. So that's another area that we can help with on our whole offshore team. And we're even helping clients set up their own offshore operations as well. So all in all, we are here. We're not going anywhere. We've been here for 24 years. I think we'll be here for another 24 years. No one's going to kick me out of the country. I'm quite happy here in the UK, despite having to pay a hell of a lot more tax. My children might be unhappy when they have to pay my inheritance tax bill, but their inheritance tax bill rather, at some point in the future, unless I plan it right. But if anyone needs any help, or if you've got any questions, please do fire them away now. Alternatively, do reach out to us on the kind of through a Calendly on our website, and we'll be there to help you further. Okay, thank you very much. I hope I didn't depress your evening too much. I'm going to go and have some dinner, and I hope everybody has a lovely evening and makes the most of what the life has to offer. Thanks very much. Good evening.
Thanks for listening in to the Dental Business Guide podcast. We welcome your feedback, and if you're enjoying it, please let your friends know too. Until the next time on the Dental Business Guide podcast.